All right, everybody. So let's review some opportunities that were available today. Start with gold. Gold early morning, there was a flush, and basically it's a climax. You have the biggest wave in 37 waves and the biggest volume in 37 volume down waves. 37, 37, biggest in 37 and the most volume in 37. And then after that, someone bought it all up because the price was the biggest in 37 and the volume was the biggest in 37. Up waves right here. So I mean, you could consider that your automatic rally, but the idea here is buying activity. So someone's buying this flush, and that's the evidence. So after that, I pulled back, giving the entry opportunity right here, and then it just went straight. It just went straight to target. Went approximately, I think it was the 168. I don't remember. This is the 1.5, so it basically went to the 168 extension. So this was a good opportunity that came today. The key was identifying that when the flush happened, the buying activity came in, and you could see the wave volumes, which I have 37, 37. That was the really critical. Without that, you can't really tell. Folks might think this is a bear flag, but what it is it's it overshot, and then it's buying activity. All right, so the next one we'll take a look at. Oh yeah, I don't think I saw anything in crude. Can't remember. Forget crude. Nat gas had opportunities. The first one was available in the morning. We had selling pressure right here. Biggest in 24, biggest volume 24 down waves. Biggest in 24 and biggest volume 24 down waves. So that supply set up the retest, which set up the move down. And interestingly enough, there was this little bounce that occurred at a support level. But this was the key trading opportunity in nat gas today. And the selling pressure, I mean, it was there. Biggest in 24, biggest in 24. Test. You could see that the selling lasted 33 minutes. How long did the buying last? 6 minutes. Again, selling lasted 33 minutes. How long did the buying last? Only 6 minutes. So that is a tell. All right. And then there was a wonderful opportunity in copper. Market was going down, 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 down. And then over here, you had the biggest in 11 waves. The biggest in 11. I have one right here, 11 waves. It didn't last too long because it was actually the accumulation started back here. But I mean, the markup and the breakout was here, right? So this was the biggest in 11 waves and pulled back to test and offered this trend opportunity right here. So that was in copper where you have demand come in, DMD, biggest in 11 waves, really nice, pulls back and then goes. And finally you had euro. It wasn't, yeah, it was right here. This is the biggest in 25 with most volume in 25. Again, biggest in 25, most volume in 25. Bang, right there. Then it pulled back. I thought it was going to pull back deeper, but as soon as I saw that, the tape basically stopped going down. Why? It can't last. It's only 3 minutes. So this tape goes up 21 minutes. First pullback 19, 15, 15, 3, dried up and went up for 15 minutes with a nice markup bar in the middle, offering the retest of that area, and then giving, it's not a big move, but giving at least a rally. I thought it was going to come back down here. It didn't come back down there. It took about 4 corrective waves for it to pull back and dry up. The selling pressure dried up right here, and the tape just finished here. And here, what was going on was they were attempting to go higher, but there was a high offer over here. It was overhead liquidity, just didn't let them pass. It was a big seller right here, and that's why, you know, this up move took about 39 minutes. This one took 30 minutes. It couldn't break out, and fell back. So here are the key points. Basically, you take a look at, this is price right here, price and volume, but in waves, right? So you have price and you have volume in waves, and then something to quantify them, because there's a lot of times where, especially if you're trading multiple markets, you need to know quickly assess, is this a lot or not? You know, and a lot of times you won't be able to do that, especially if you take a look at multiple markets without some type of indication telling you how big the wave is. And it could be done in various ways. It's not the only way to measure. So do it, you know, biggest in 25 waves. The volume is so outstanding here. Biggest in 25 waves also, but it could also be done based on averages. So for example, this right here is 4 times the average distance. 4. That's 400%. This is, I think this is even higher. So this volume at the time was very high price and volume. You can see the size of the wave. And so the takeaway here is that, you know, you need a way of measuring price and volume, not just have the waves, but some way to quickly identify, you know, what's moving, what's not, how strong the buying is. And basically just take a look at price and volume and quantify that. And then if you want, you can bring the element of time as well, because it's very helpful. The element of time, I've noticed, is very helpful. One of the reasons is you normalize all the charts, because, you know, time doesn't change. It's minutes, because you have a minute chart, and you could tell that a low number like 3 means that it's drying up. For example, here, dried up. Then it rallies. Here, it's only 3 minutes. Here, it's only 6 minutes. So it's drying up. The selling is drying up because it doesn't last. It's only 3 minutes, 6 minutes. Whereas the rallies, they last because there's more time. 15 minutes, 21 minutes, 39 minutes. Then it pulls back only 3 minutes and attempts. And this time it tried for 30 minutes, but it could not make any progress. Why? This is the concept of dullness, similar to the concept of effort reward. That, you know, price is dull, a lot of small bars, and it's not able to make a lot of progress. Anyway, long story short, you want to be able to, you know, you want to be able to identify, for example, price goes up 39 minutes, 15 minutes down, 12 minutes up, 33 minutes. You know, the tape is moving for 33 minutes, making progress to the downside, and only 9 minutes on the way up. 33 minutes down, 9 minutes up. Who's in control? Supply. 21 minutes down, 3 minutes up. Who's in control? Supply. 12 minutes down, 9 minutes up. Who's in control? Supply. 27 minutes down, 9 minutes up. Who's in control? Supply. Why? The down waves are not only bigger, but they last longer. Here, who's in control? 45 minutes down, 30 minutes up, but you see a difference here. Why? Because this time the tape went up for 30 minutes. That's an issue. if you're bearish, because the buying activity is lasting longer than all of the prior waves. It's longer than 9, 9, 3, 9, 12. It's longer than any up wave in this downtrend. And then you have a flush and a reversal. So this is very important. And also, this style is not really talked about. No one will tell you that, or the majority will not, don't know that you can actually use minutes, just like you use volume. So you can use time, price, or volume. And if you have volume already on the lower panes and price on the lower panes, you can bring in the element of time. And I think it's the easiest to read. But remember, you need to combine this with the other factors to be able to get an understanding of, the strength of the wave. It's distance and time and volume. All right, distance, time, volume, put that all together. All right, that's all, folks. Have a good day. Bye.